Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Tuesday. Hope everyone's doing well. All right, so let's kick off this session with a quick reminder of what we have hot zone wise coming up today. And I'm going to jump on over to tradingeconomics.com. And the reason for that is there are sometimes events on it that are not going to be on the Forex Factory calendar, but it's really best to check them both. And you'll notice we have that CB Consumer Confidence Hot Zone at 10 a.m. That's the big one for today. And we do have some Richmond Fed numbers being released. When you take a look at the Tuesday calendar over at Forex Factory, interestingly enough, and this is why you need sometimes more than one calendar anymore, the sporadic representation of when the different Fed members are speaking and whether or not we're going to see them on a calendar seems to be just very hit or miss. And you'll see that at 2:30 Eastern, FOMC member Goolsbee is going to be speaking. And therefore, between consumer confidence and an FOMC speaker, we could have some interesting action. Obviously, consumer confidence is going to affect that AM session the first half of the day, while Goolsbee will likely set the tone for the close at around 2:30. So keep that in mind as you're navigating the day, the morning, and what it is that we're going to be dealing with today. Now, when it comes to what we'll be dealing with today, let's see where we are in terms of yesterday's action and today's open. We are barely above the previous session close, mildly bullish. Overall, though, the 1 hour time frame and the 5-minute time frame are pretty darn neutral. We're not inheriting a trend. Although I will say on the 5-minute chart, you'll notice between about 6 a.m. to about 8:30, S&P was trending higher. So the intraday trend and intraday sentiment, while neutral now, was bullish. So I will basically respect the trend that was, and I will have a mildly bullish outlook on the morning. All right, so the next up, we've got the NASDAQ. Same story, neutral on the 1 hour. We've got and by the way, we just came off an oversold slow stow. You can see here on the 1 hour. So the 1 hour is coming off of a bit of a neutral fade in this area. Overall, again, uptrend before the bell, neutral. But keep in mind, respect the trend that was. I'll be favoring more buys than I will be shorts. Although if we're neutral and we end up near the upper end of the slow stow, maybe we do look for a short. But let's take a look at two markets that might ultimately tell us what it is we do want to focus on. What is the mood from bonds? And right now, to say it's up or down would be a little too binary an assessment, because if you think about it and if you look at it, right, we're actually looking at an inside candle. So this candle right here is inside the range of the previous high to low. That's an inside candle. It's really not telling us much. Yeah, it's down, but it's trading within the previous session range. I'll view that as fairly neutral. 1 hour is neutral. Intraday is neutral. So let's see if this inside candle can regain support, say back above the previous session open or close, and that'll give us a little bit more of a bullish take. Or if the intraday time frame can get more green grab candles and give me a better directional take to the upside, because that means yields are heading lower and equities do like that. All right, what about the dollar? Let's take a look at the 6E. This is the easiest way to understand what's going on with the US dollar. And 6E is actually trying to turn into an uptrend. This recent surge here in the 6E means the US dollar is heading lower. And you know what? Equities like that. 1 hour is trying to get bullish. And so that could be a significant move, especially if we can get through these white dotted lines right here. That's the 200 propulsion. So a lot to like that, a lot to like with that move if we can continue higher. And by the way, above the previous session close, above the previous session high. Gang, that's a bullish stance. Even though that's a true gap, we may see some fades on the open. Gap traders like to fade true gaps. I'd say even more than sort of your vanilla gaps. But nonetheless, this is a bullish look at the euro, which means a bearish look at the US dollar. All right, so let's jump into our questions. Type in whatever symbols you'd like. If you have questions that are how to, gang, I'll take them depending on how much time we have. This is not necessarily an instructional show as much as it is a market analysis show. All right, so let's grab some questions. And if you do have questions for me regarding sort of the how-to, we cover that 5 days a week in the Sector Secrets Mastery as well as the Futures Room. And we have a lot of supporting documents in the Learning Center and so forth. Okay, so first up, Jack. All right, ZB and ZN. Love it. So on the daily, the ZB is neutral. ZN is double red on the multi. Will I share my thoughts? Yes, when it comes to the long bond, that's usually what I look at the most, Jack. Great question. When I look at the long bond, I prefer to view yields through the prism of the ZB, although ZN is really important, especially when we start looking at the NASDAQ. And to your point, we have a neutral ZB. That's the 30-year. Think of that mapping to TLT, by the way. And if you look at ZN, that's your 10-year, that would map to the IEF ETF. You'll see that it is in more of that bearish trend. So my thoughts are this. I'm favoring yields moving higher because we have as clear a macroeconomic picture as we have had in terms of where rates are going and where they're going to peak. Give or take a quarter point, gang, we're in the neighborhood. We've got the best clarity we've seen in some time in terms of where the Federal Reserve is going to take rates. And if that's the case, then once we know where they're going to take rates and when, as in which meeting, which month, they're going to peak, then that invites when are they going to cut. And it does look like the possibility for a cut has once again been pushed to maybe December, but we've seen this before. We've seen sort of Fed fund futures kind of go back and forth between a November cut or a December cut. But as long as we're talking about a cut, even if it's in early 2024, as long as that's the next thing we expect, the market will essentially front run that. All right. So Anne mentions your overview with tools is an outstanding jumpstart to our morning. I appreciate that, Anne. You're very kind. It's my pleasure. It's sort of my cup of coffee too. Right? Just kind of get everything rolling. All right. So next up is Kevin asks VALE on the daily for long calls. All right. So let's open this up. Let's look at this, however, from the perspective of market structure, which is to say, we'll jump on over to the layout where we look at the wave. Long calls. So this is no longer a trending market. So this is not a reversion to the mean conversation, is it? Right, Kevin? This would be more along the lines of, here we go, 200 propulsion. And we are below 20. Kevin, we are below 20. So it's going to be really important to incorporate volume into the conversation. So that would take us over to the volume max layout here. And let's take a look at where we are there. Staying above the mean, right? Staying above the mean is going to be very important. So here's my support with volume right here at the mean of the anchored VWAP. You can see that line right there, this white line. Interestingly enough, the 200 propulsion, which is a price-based indicator, and the anchored VWAP are moved to the mean of the V-score support, right? It's support, volume-based support, price-based support. The closer we can get to that, the better. I would say that's what I would focus on. And we're really talking about a potentially oversold market. Keep an eye on that 200 propulsion, but anything below 20, I would even say, pull it up on Here we go. Pull it up on the, where are they? Here we go. Pull it up on the trading view charts and look at the volume profile on the weekly or the daily, and start asking yourself, where's the point of control? Where are those volume ledges? Where are those more important price-based levels of volume? We're in a pretty decent area of volume, but notice you have a lot of folks who've dug their heels in on VALE around $13 based on volume. Okay. All right. Let's see. Next up is, let's see. When I say respect the trend that was, how far back in time am I going back? I'm using the multi-trend tool. So yeah, let me dive back into that ES, respect the trend that was. Here we go. Okay. So how far back? There's no market memory. In other words, I don't have to pull up 2, 3, 4, 5 days or a month or whatnot, because it's automated with the multi-chart. So I don't have to do that manually. So here's the uptrend right in here. Respect the trend that was. So that's what I do. So there's no set amount of time in the look back. Although I love your asking the question about look back. It's so important on so many other facets. But because I've automated this, I don't have to do that. So on the 5-minute, that's it there. Let's say on the 1 hour, right? Respect the trend that was in the 1 hour with a longer slice of psychology. Neutral now, was mildly bearish before. And then respect the trend that was in terms of the daily. Neutral now, oversold, by the way. Oversold, which makes the slow stow and the DPMR very interesting. And do I want to be bullish? Yeah, respect the trend that was. This was up. This is now sideways. Yeah, respect the trend that was would lead me to look to the long side. So that's the way we do that. Okay, thanks for the question. MOS, dark matter and battle rap. That's hilarious. Okay, so what do we have here? Let's start with the toss layout with the tops tools. Notice, by the way, gang, I don't know if you can see that at the bottom of the screen. See at the bottom of the screen there, all the little windows that pop up? I've got my multi-chart. I've got my volume max layout. I've got my tops layout. I've got my HPMR and DPMR layout. They're all symbol linked so that when I pull up one symbol, they all populate with that same symbol. So I can see them through the prism of volume, structure, volatility. Really, really easy. I can toggle between the three. That said, MOS, trying to go green. I would be very careful though. It's kind of a tricky spot. It's north of the 200 propulsion, which is inherently bullish. We're coming up into automated resistance. Gang, if you're looking for automated support and resistance on your charts, okay, like this, I have found nothing better than the modernized Darvis 2.0 that we have been sharing. Here's the key word, gang. You have to buy anything. When it comes to price-based support and resistance, if you are looking for price-based levels, now, you know, I also look for volume-based levels. I also look for volatility-based levels like the HPMR and the DPMR. But if you're looking for price-based levels, gang, go download this Darvis 2.0. We've made it available for free for many, many, many years. It's just the best way to automate price-based levels. Now, if you have HPMRs, you know to use them with the Darvis. You have DPMRs, I'm going to teach you how to use them with the Darvis. The reason I bring this up, dark matter and battle rap, neutral really still, trying to get bullish, overbought, automated support and resistance. All right. That's that That's that automated Darvis 2.0 that I'll be looking at for potential. And by the way, let me show you here. We have resistance in a number of levels here. So please, please, please keep that in mind. All right. Look how easy it is when they're already on the screen. 1, 2, all these levels are going to be potentially upside resistance. Overall, I think the path of least resistance is up, but I won't be surprised to see a little bit of a pullback and then possibly more bullishness. But I'd be concerned about follow through to the upside until we get a little bit better clarity on the trend. Thoughts on TGT? And by the way, gang, notice all of that was automated. That's the reason we can do these quickly. That's the reason we can do these in a very systematic way. What are my thoughts on Target? Target's not that different, Pete, to what we just talked about with MOS. We're still below the 200, which is mildly bearish. The trend that preceded was up, even though we're neutral. So it's kind of a tricky spot. Do I want to be bullish or bearish? I want to be a buyer, but I want to be a buyer likely when we complete the transition to being oversold on the slow stochastic. So let's get down to this low, right? We talk about the low level. Gang, anytime you're using a slow stochastic, there's a high and there's a low, right? Typically, most traders will use an 80 as a high, a 20 as a low. Just that simple. So the closer we can get to that low, to the 20, the more we can look for a move to the upside, with the target likely being where that 200 propulsion is sitting. Okay, so I'd like to be a buyer, but there is going to be a limited follow through to the upside until we can establish price above the 200 propulsion. All right, Tesla. Sure. Taking a look at Tesla. I do want to be a buyer. Really easy to see why. Take a peek at the multi-trend. It's been green for all of February, and that gives us a lot more. It gives a lot more to work with in terms of when we hit these DPMR levels, right? We hit these DPMR levels, we can be buyers, right? Even in CHOP, we hit the DPMR level, we can be buyers. But we're also allowed to be two-way traders in CHOP. But once we go green, it's long only, long calls, long shares, whatever. So we're going to be looking for support from which to buy that. Now that's on the daily. What about the 1 hour? And for folks who are wondering, okay, Rog, what's the difference between the daily and the 1 hour? You're putting the DPMR on them both. The big difference is how much time for follow through are we looking at? I can be more nimble on a 1 hour. I can buy options with a closer days to expiration on a 1 hour. They're less expensive, right? When you think about the expense, they're less expensive because I don't need as many days to expiration. So here, we also have an uptrend, okay? There we go. So I would definitely look for a mean reversion and play Tesla to the long side, regardless, all right? Okay, we're just about out of time, gang. And let's see. FreeWeb asks, is it okay to have more than one trading system, or should I focus on trying to be consistent with one? That's a great question. What I would say, which is what we do every morning here in the show, is I don't believe you should have one trading system. I really don't. What you should have is one or two tools. I use the grab candles, the wave, and the multi-trend. One or two tools to tell you which one of the four market trends, the market, the stock, futures, ETF that you're in, the symbol that you're looking at is in. Once you can identify market structure, then you know which strategy ideally to use. And that's really the trick. It's not really a trick. It's not a secret. It's not a trick. It just doesn't seem to be understood by a broad group of traders, which is there's no one secret system. There's no one secret indicator. It's all about ultimately, how do we want to treat the current mood of the market? That means we need a tool to be able to assess the current mood of the market. All right. So that's it, gang. As always, thank you so much for being here for Charts and Coffee. Thanks for bringing your symbols. That is what this show is all about, gang. Bring your symbols. Let's break them down. I'll show you how the tools work and maybe give you a bit of a plan of attack for entry. Be good to each other, gang. Thanks as always. I'll see you all tomorrow. Same time, same station.